All right, very well. So today is our first day of the Forex revival, and then I promise that at the end of the fifth day, everybody should be able to have what it takes to be profitable in the Forex market. All right, so I'm not going to make this video long. It's going to be very short, and then we'll have detailed explanations later. All right, so I've realized that what most of us need is that we need step-by-step procedures and how to analyze the markets. And few of the things that we'll be covering in this revival, if you don't have it, you won't be able to understand most of the strategies that they are teaching. All right, so we are just going to cover a few things just in a few minutes. Now, every forex market has these four phases. Every forex market has the accumulative phase, the advancing phase, the distributing phase, and then the declining phase. All right. So usually when you hear of an accumulative phase in the forex market, it's a market that has been falling down for the past 5 to 6 months, and then it's still coming down before the buyers take over. All right, so I'm going to make this video practical enough that you can be able to understand everything that I'll explain. All right, and then we have the advancing phase. The advancing phases, after the fall, you get to realize that immediately the buyers have started taking over the market from the sellers. That means the market is what? Advancing. Then no market stays down forever or no market stays up forever. So when it gets to the top, for it to come down, sometimes it will range to go up and then to come down, ranging between a certain price. Okay, so that is the distributing phase, and then the declining phase after the sellers have taken over from the ranging markets. Then what happens? The market will decline down again. All right, so this is just something that you should just know off head. It's not really important for what we are going to study, but you just have to know it. All right, so we're going to our first slide, the second slide. Now, before you be able to analyze the market, before you be able to analyze every market, you first of all have to know the market's direction. Now, if you don't know the market's direction, it will be very difficult for you to have an informed decision. And we all know that the only decisions that we make in the market is what? Either to buy or to sell. So if you just open your broker and you don't know where the market is going to, how do you know whether you are going to buy or you are going to what? Sell. All right. So I'm going to take you through the various market directions that we have. Okay. So the first one is a trendy market. When we say a trending market, what does it mean? The trending market is subdivided into uptrend or downtrend. All right. And then the second one is a ranging market, and then the last one is a choppy market. Okay, so when you open your broker, immediately you open your broker, you will see either of these. Okay, if you don't see a choppy market, you see a ranging market, or you see a trendy market. And when you see a trendy market, it's either trending upwards or it's trending what? Downwards. Remember, I said for you to be able to what? Have an informed decision, you need to be able to identify the type of market that you are coming to trade. Okay, you need to identify the market's direction. All right, so now let's take them one after the other. Okay, all right, so uptrend. The uptrend, what is an uptrend? Okay, so this is my personal definition of what I think an uptrend is. Okay, so this is the type of market where there are more buyers than sellers. Hence, they are pushing the market upwards often breaking previous resistances and rendering them as what? As supports. Okay, so now I promise to make this practical enough. So let me go to my drawing board. All right, so what do I mean by an uptrend? What I mean by an uptrend is that this is where the market is now, but you realize that it's going up and then it will come down a bit, and then it will take over again, and then it will come down a bit. Now, and then it will go back. You see that the buyers are pushing it up, and then it will come down a bit, and then they are taking it up again. And then that is how the market is going. All right. Now, I made mention of something that hence they are pushing the market upwards, often breaking previous resistance and rendering them as what? As supports. Okay, so this is what that means. It means that now this is a resistance. This is a resistance. So if you scroll back on your broker, you realize that when the market has reached a certain place over here, that's reached a place over here, it acts as support when it was coming before it broke through. So when this same market was going and it reached here, it realized that no, something happened over here. There was a struggle between buyers and sellers over here. So it hit that place, came back, and then it went up again, breaking through this resistance. Once it has broken through the resistance, it has rendered it as what? As a support. All right. So now it went up, it was going up, and it realized that no, it has reached this place again. This place. The market has a memory. That's what a lot of people say. So when it got to that place, it realized that no, something happened over here again. Okay. So it came down and then stopped over here and then broke through this resistance. So immediately after breaking through this resistance, this place has now become what? A support in an uptrend. Okay, so a market where buyers have taken the price to break a resistance, remember when the market was coming down, this place was what? Was a support, but it broke through the support. Okay, so it's now a resistance when it is at the down. So breaking through this resistance in an uptrend has been rendered what? As a support. Okay, I believe this is very, very clear. Okay, so the market was going up again, and the seller said, no, this is where we knew that no, we pushed the market down. So let's do it again. So they did it again here. So the market got to this place and then they push it down here. So it stopped over here. And then the buyer said, no, we can't allow the sellers to continue bringing the market down. So let's take it from them. So this was where the sellers push it down. They push it down here. And then the buyer said, no, let's take it over. And then they took it and then they broke through this resistance, making this place to become what? A support. Okay, so that is the meaning of an uptrend. So when you see a market that is going up and then has broken through a previous resistance, making it support, it has now become what? You know that the market is what? Is trending upwards, or the market is in an upward trend. All right, so now let's go to the second one. Now we have downtrend. The second one is what? Is a downtrend. Now the downtrend is just the opposite of what? Opposite of an uptrend. All right. So this is my personal definition of a downtrend. Okay. This is the type of market where there are more sellers than buyers. Hence, they are pushing the market downwards, often breaking previous supports and rendering them as resistance. All right. So as practical enough, let me go back to my drawing board and then I take you through what I mean by that. Okay. All right. So You see the market like this. You see the market from the top coming down, and then it has to go up a little bit. And then it's coming down again, has to go up a little bit. Then coming down, it can come down further and trying to go up again, but still it needs to come down. It needs to come down, and then have to go up again, and then go up again, come down, go up again, come down, and like this. So you see this kind of market. Now let's decode the meaning of what I put here. And then I said they are pushing the market downwards, often breaking previous supports and rendering them as resistance. So that means when they break the support, that support will now become a resistance. All right. So now let's go back and look at what I mean. So they were bringing the market down. They were bringing the market down. They were breaking the market down. Previously, when they were sending the market upwards, there are records of all these all these swing points. We are not yet there, so I don't want to mention it, but there are records of all this when the market was going up. Okay, so now the market was coming down, the market was coming down, the market was coming down, and realized that no, there has been a record over here. Okay, so the buyers have taken over the market here, and then they send it upwards. Okay, so when they send the market upwards, the sellers said no, let's push it down again. Okay, so this was where they took over the market, this place here, where the buyers took it over from the sellers, and then they send it up. Okay, they send it up, and then what, the sellers brought it down again, breaking this resistance. Okay, breaking this support, sorry, breaking this support. So right after breaking the support, this place has now become a resistance. Okay, now they were bringing it down again. They were bringing it down. They thought they are in comfortable lead. They were bringing the market down, and then the buyers said, no, let's take it over from them. So the buyers have taken it at this point. They took it, and then they were sending it upwards. And then the sellers said, no, we can't allow them to what? To take over the market. And then they also started bringing it down. So this is where the buyers have taken it. Remember this place. So right after breaking through this support, it is now a resistance. It is now a resistance. Okay, so I believe everyone can be able to, looking at this chart, you'll be able to know where the support and resistance is. Okay, let me give you the third one. They were bringing the market down. They were bringing the market down, and then it has stopped over here. This place becomes a swing point. There is a history. If you trace this place backwards, you realize that there is a history of what the market either ranging or consolidating there. Okay, so it got to this place. It got to this place, and then the buyer said, no, let's take it. These people are pushing the market downwards too much, so let's take it from them. So they took it from them, and then it was going up, and the seller said, no, let's take it from them. So they took it from the buyers, and then they were bringing it down. Immediately they were able to break here where these people took it from. Immediately they were able to break it here. It has now become what? A resistance. Okay, so if we go on, we get to realize that we'll find another one here, we'll find another one here, we'll find another one here, and then we'll find another one here. Okay, I believe this is cool. If you open your broker, you are going to see all this that I'm talking about. All right, so now that is a downtrend. Okay, now let's go to the third one. Now the third one is what? A ranging market. Now, what is a ranging market? This is the type of market where buyers and sellers are taking the market to a previous resistance and support to and fro from that place, and then it comes down from the same place, and then it goes back to the same place. Or simply there is a price movement from a price region up and down, up and down. All right, so as practical enough, let's go back to our drawing board, and then we will be able to what identify what a ranging market is. All right, so I believe everything is getting clearer. So after watching this video, you should be able to identify a trending market, whether trending upwards or downwards. You know what makes a market to come down, and then you know what makes a market to what to go up. Okay. All right. So let's go to our drawing board. So when we say a ranging market, this is a horizontal line, and then this is another horizontal line. Okay. Now, what is the definition? What definition did we give to a ranging market? This is the type of market where buyers and sellers are taking the market to a previous resistance and support to and fro, or simply there is a price movement from a price region up and down, up and down. So it's very, very, very simple. So this is what? This is a resistance here. And then this is what? A support. A resistance is simply the area that has stopped the market from going up, and then the support is an area that has stopped the market from what? From coming down. Very simple. The support and resistance that we have been hearing is not anything. So it says that the price is moving from the upwards price to now towards to the down price. Okay, so this is just it. The price, it can start from here or it can start from the top. Okay, so maybe the price started moving, maybe it came down, it was coming from the down, and then it reached this place, and then it has to stop, and then it's coming down. Sometimes it may not even get to this place, and then it starts going up again. When it gets to this place, it may even be that it can cross a little, but that is the region. Okay, that is why the explanation says from a price region. Okay, that area. Okay, and then it starts coming down, This one may cross even a little and then go up and then come down and then go up and then come down. All right, so most of the directions of the market, this is how you see them on on your broker. Okay, so when the market gets to this place, so when you see a ranging market, what do you do in a ranging market? You can buy and then you can sell. All right, you can buy and then you can sell. Okay, so when you see the market hitting this place, this is just a basic strategy. When you see a ranging market, maybe 1 or 2 or 3. Okay, aside the breakouts that may happen, and even that one, you'll be able to determine it from what the currency strength and then the candlestick pattern that forms when it's getting to the support or resistance. Okay, so when it's getting to this place, you know that no, the market has a memory of what hitting this place and then going up. So you can take your buy over here, you buy low, and then you'll be able to take what you take profits anywhere in the middle or even before it gets to this place. Sometimes it may not get to this place before coming down. So this is a ranging market. Okay, a ranging market. We have our resistance here, and then we have our support here. All right, okay, so this is about the ranging market. All right, so let's go to the next one, which I think is the final one. We have what? The choppy market. All right, so let's say you open your broker, and then how do you identify a choppy market? Okay, now this is a type of market where buyers struggles with sellers and market has no clear direction. It's often referred to as an indecisive market. Okay, some people say indecisive. We are not doing grammar here. Okay, so it's not having any clear decision. Okay, so as usual, let's go to our drawing board. and then we'll be able to what? Identify a choppy market. So let's say this is the buyers taking the market up, and then the sellers bring it down. And then the buyers take it again, and then the sellers bring it down. Buyers taking it again, sellers bring it down. Buyers taking it again, sellers bringing it down. Okay, so it's just going up, coming down, going up, coming down, going up, coming down, going up, coming down, going up, coming down. You can go up a little, come down a little, come down a little, go up, go up. You will not be able to what? Predict this kind of what? Market, unless you have a clear strategy. Unless you have a clear strategy. If you can see this market, you realize that it's not going up, it's not coming down, it's not ranging to. Okay, remember ranging, we say the market what? Will be going up, go up, go up, go up, go up, hit a particular resistance, come down, come down, come down, come down, hit a particular what? Support. But this one goes up, come down, goes up, come down, goes up. Okay, so new traders are often, or new traders are often advised to stay away from what? Choppy markets. Often advised to stay away from choppy market and stick to trending markets and then rangy markets. All right, so now, why are you supposed to understand the market's direction? Why is it important for you to know the market's direction? Now, this is what you have to do, or this is what you have to know. Now, after identifying that this is what? A trending market. So let's use the uptrend first. Let's use the uptrend first. Now, after identifying and you saw that the market is what? Is in an uptrend. It's in an uptrend. What is the decision that you have to make? Once you see the market in an uptrend, the only decision that should come into your mind is what? Is to buy. So that is why traders say the what? The trend is always what? Your friend. The trend is always your friend. Okay. Now, it is assumed that since you don't know where the market is going to stop, when you are able to, now I made everybody to know what an uptrend is, what a downtrend is, and then what a ranging market is. Okay, so now if you see a trending market, a market that is trending upwards, the only decision that should come into your mind is what? Is to buy. Is to what? Is to buy. Okay, so when you see a market that is trending upwards, all that you have to do what? Is to buy. Okay, and then how do you know where to buy? I believe that at the end of the 5th day, you will be able to know where to buy. But then let me chip this one in. When you are buying in what? In an uptrend, you always buy low. And why is the lowest point of the market? That is the support. You buy at the support. Okay, so now this market was going up and then it has hit a resistance here. It has hit a resistance. Now it is coming down. It is coming down, and then you realize that it is now going up again, going up to break this resistance, to make it a support, just as I said earlier. So where do you buy? This is where your buying point. I believe that is okay. All right, another example is going up. The market is going up, and then has hit a resistance here. A resistance means that that particular place, the sellers are stopping the buyers from breaking through. So it needs to bring them down for them to gather momentum and then go and then break through. Okay, so this is the resistance here. This is where the sellers have stopped the buyers. Okay, so what happens is that once they are bringing the market down, And then this is where they also feel that no, this is where we need to what, go back and then overcome the sellers. So they take the market from here and then they go through and then break through this resistance. Okay, so now this place, the bottom here has now become what? Become a buying point. All right, it has now become a buying point. So just with my eyes, without doing any drawing, without doing any analysis, I will be able to know that this is where I'll buy, this is where I'll buy, this is where I'll buy. All right, that is why if you are drawing your trend line, which tomorrow, after I finish teaching the swing points, once you're able to identify your swing points, you can draw your trend line on all the swing points, okay? So you know that when this market is coming down again, it will come and hit this place and then go back. So this place will be what? Your buying points. I believe is very clear. All right. So this place should be your buying point. But you see, one of the main reasons why people are not able to buy at the right entry point is because they can't wait for the market to come down. All right. Now, this market that is going up like this, it can take hours. It can take hours before coming down, depending on the time frame that you are using. If you are using a 4 hours time frame, this thing can take more than 8 hours before coming down. So for people not to be patient and wait for the market to come back and hit their trend line, they take the trades at every place that they want. All right. But this is what? This is a clear direction of what? Of the market. So if you see a market that is trending upwards, what should come into your mind is that you are looking for what? Buy positions. All right. Just as I've demonstrated. Okay. All right. So now let's go to the downtrend. Okay. Now, if you open your broker, and then the first thing that you have identified is what? The market is trending downwards. What do you do? Just opposite of what? Of the uptrend. Okay. So you look for sell positions. Remember the uptrend, we look for buy positions. Now we are going to look for sell positions. So the market is coming down, rejected here, and then taken upwards. It was pulled back and then was going up again. It was pulled back and then was going up again. It was pulled back, going up again, pulled back, going up, and then pulled back. Okay. So now this is a clear downtrend. So now when you open your broker and you have identified that the market is what? Is in a downtrend, the only thing that should come into your mind is that you are going to what? Sell. Okay. Now, nevertheless, you can take buy positions. You can identify buy positions on a downtrend and can identify sell positions also on what? On an uptrend. But as a new trader, you need to focus on what? On the trend. Okay. Unless you are having a perfect or a very good strategy that can be able to break that logic, just stick to the trend. Okay. Now, so let's say the market is coming up from here, and then the buyers said, no, these people are coming down too much. Let's take the market from them. And then they take the market from this place. And then it was going up, and sellers said, no, we can't allow these people to do what? To overpower us. So let's take the market from them. And then they took the market from them. And then they are bringing it down. They are bringing it down to this place. All right. They are bringing it down to this place. So this place is what? This place has now become the selling point. This place has now become the selling point. So that's why they say when you are selling, you sell high, and then when you are buying, you buy low. Okay, you sell at the resistance. Okay, you sell at the what? At the resistance. When the buyers were taking it up, this is my. All right, so that was my network. Somebody was calling, so Okay, so now the buyers took it up again. They took it up again, and then the sellers said, no, we can't allow these people. So they took the market from the buyers here, and then they brought it down. They brought it down. So this place has now become what? Your selling point. All right. So just with my eyes, I can see and know that this is where I should sell. 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 All right. So if you look at this, you realize that the sellers have more strength than what? Than the buyers. Because look at this. Look at just the length of the buyers just from here to here. But look at the length of the sellers from here. So they have more power. Are you getting it? Now the buyers took it again upwards a little, then the sellers brought it down to this place. Okay, so the buyers took it again just a little up, and then the sellers have to take it down. So just with your eyes, you can be able to watch the candles and say, no, are the reds more than the greens, or the greens are more than the reds? Okay, as a new trader, you can't just focus it like that. But for someone who has experience in trading, you will be able to know just by studying the candles. All right, so this place becomes what? A selling point. This is where I'll sell, this is where I'll sell, and this is where I'll sell. Okay, so if you're able to connect this, your swings, connect this place, you will be waiting for the market to come down and then go up again, hit the trend line and come down. So you will be waiting for what? For the market here. Okay, but when the market gets to this place and the candle formation over there, it won't only get there and then you take your trade. No, when it gets over there and then maybe you see that no, the candlestick that has formed here is a big bullish candle, and then you watch it and then you realize that no, a bullish engulfing candle has been formed, then you have to know that the market has come to an end. Okay, the downtrend has come to an end. So now the buyers are now taking over. Okay, but let's say it's getting to this place and then maybe some small green candles, or only some small buyers, and then the sellers take it over again. That one alone can tell you that no, the market will come down. So if you take such a trade, you just put your stop loss somewhere here, and then maybe you put your take profits at the down there. Okay, so we are done with what? With the downtrend. Okay, now let's go to the last one, which is what? The ranging market. Okay, now you open your broker. You open your broker, and then you see that the market is what? Is ranging. See that the market is what? Is ranging. This is simple. You buy here, you sell here. So you just be waiting for it. You just be waiting for it. When it comes down to this place, you buy. When it goes up, you sell. When it comes down, you buy. When it goes up, you sell. When it comes down, you buy. All right. Now, it is not automatic that once it gets here, it will come down. It can get to this place and then break through. Okay, it can break through, which maybe it's now a new trend, that a trend reversal. Okay, so when it's getting to this place, you have to watch the candle formation that is happening over there. That is why it is very important for us all to take the candle studies seriously. The candlestick Bible is there, and then we all need to take it very seriously. So when it's getting over there and the particular candle that is forming over there, okay, you need to interpret it and know that no, when this candle is forming at the point of resistance, what does it mean? Okay, what does it mean? So that you don't do any mistake. All right, the same way when it's coming over here too, it has the same logic. Okay, so that is just it about what arranging markets too. Okay, so this is the end of our first lesson in the Forex revival. The first thing that you do when you open your broker is what? Identify the direction of the market. Okay, when you see a trending market, what you need to know is that whether you need to identify whether the market is trending upwards or downwards. If it's going up, look for buy positions at the support. If the market is coming down or in a downtrend, look for what? Sell positions at the resistance. All right. Okay. Now, if you get a ranging market, you see that this is how the market is. Okay, a lot of people get confused which of the time frames to use. It depends on you. Okay, if you're a day trader, you can start with analyzing from the 1 month, 1 week, daily, and all those stuff. But as a scalper, scalpers are always advised you can use the 4 hours or the 1 hour time frame for analysis. Sometimes I even use the 30 minutes to draw a quick, that one you know that you are coming for a quick what? A quick entry, and then you just leave the market. That means you are monitoring your trades. All right, so it depends on any of the time frames, but 1 minute, 2 minutes to 15 minutes mostly are not allowed. Okay, or it can give you a wrong prediction. All right, so if you see a downtrend, you look for sell positions at the resistance levels. Okay, and then if you get a ranging market, you'll be looking for your sells and then your buys, your sells and then your buys at the same time. So all this needs patience, and then you need to be monitoring the market before you'll be able to do what? To take the trade. All right, so this brings us to the end of our first lesson, and I believe that it has revealed a lot to us, and if there is any question, we will ask when during the discussion time. All right, thank you and enjoy the rest of your evening. God be with you all.